Hello and welcome to the Stock Planner channel. Today we're going to talk about food delivery company called DoorDash, ticker DASH, trading at around $55. DoorDash is a leading food delivery platform in the United States with a market share of 59% as of March 2020. I believe Uber is going to be a competitor of DoorDash. I've never used DoorDash. The company is facing intense competition in the emerging food delivery sector. More and more people are eating at home, and its market position may be vulnerable to changes in the industry. More competitors, more cities, but right now, DoorDash is the largest company. It's getting expensive to eat outside and have it delivered, plus a tip. I understand the drivers make a lot of money. As DoorDash expands, it may face increased costs for customer acquisition, which could pressure business margins. I think we're going to see a big change during the recession in this industry. And I think DoorDash and other delivery companies like Uber, Domino's, Papa John's are all going to face headwinds during the next recession. My daughter likes Domino's. To stay competitive, the company needs to find new ways to retain customers and maintain growth. Maybe the health food industry might be an area to target. People are eating healthier. Now, I think investing in DoorDash during the recession may come with very high risks, and I'm going to be careful about this. In a minute, we're going to look at the chart. DoorDash has seen solid growth in recent years, with the total orders increasing 27% year on year. Uber and DoorDash are not going anywhere. Now, before we get into the analysis, I want to remind you that the Stock Planner channel is a swing trading channel. We try to predict the reversals in the market and then capture the trend between. We're an education channel sharing our ideas. We have a Discord. There's a free area there, very robust. But it's important to do your own due diligence. Learn it for yourself, develop your own trading strategies, and win for life. So let's get started. This is TradingView on the weekly. Each bar is a week's worth of data. And we can see that late 21 or early 22, DoorDash has slid down. Wonder why. And it's leveled off and consolidated at the moment. Are we headed for more downside or upside? That's what we're going to try to answer. Looking at FinBiz, you can see that there has been that down slide for quite some time. But if you look further deep, there's some consolidation here, and it's trading in within a range. Now you can ask yourself, is it going up or going down within that range? FinBiz says the target price is $72.40. That's up in here. And by the way, that sound that you hear is I'm trading, and I have alerts set. I use TradingView alerts. I use trading OmniBroker alerts, and I also have a Google spreadsheet, which I send alerts as well, all to my cell phone. That way I can go out, which is what I did today. Left and traded mostly away from my desk. Anyway, this has a recommendation of a moderate recommendation of a buy. It is optional and shortable, and this company is not profitable. Tip Ranks is another free tool. It says that its target is 74, 72, 74, 75. Moderate buy, just like FinBiz, and it has a neutral ranking. Some insider selling, hedge funds are buying it, and negative technicals. That's why it's going down. I didn't read this article, but DoorDash and Starbucks set to combine forces. That is interesting. Simply Wall Street, and you can use this part of it for free as well. I have a subscription for this. Trading at 26% below the estimate of fair value. Revenues are forecast to grow 14%. That's interesting. But looking at Snowflake, the company is healthy, it has good value, but the future is a little iffy. And I think it's because we're looking at a recession. It's saying that DoorDash, compared to its peers, is moderately priced. This is the fair value calculation. It says its current price is 55, and it should be trading at some point in time in the future 73. 70 through 73, 70. So all the analysts out there are thinking this thing is going to go up. Future revenue growth and earnings are flat. and we don't see that. Past performance, revenues, it's been increasing all along, and their earnings have been flat. Or industries at 22%, the company's at negative 19. The financial health is pretty good with this. It has more assets than the liabilities. That's good. Just got to get profitable. Another free tool I use often is Option AI, and it produces the expected value or the expected move of the price over a period of time. And they're saying over the next week or so, DoorDash should move about 4%. 1 month is 16%, and 3 months is 19%. That's a big move, 19%. But the problem with this is you don't know which direction it's going. So entering the expected move into the spreadsheet, we get 19%, as we found out with Option AI. That will produce a buy expected move. If you bought it, thought it was going to go long, it'd be $65. And if you thought it was going to go short, it'd be $45. It had a green bar today, and this was on a day when the market slid down. So the analysts think it's going to go up to 72 or 74. This is the RSI, and at this point they would say it's going to go up. And also here, this is the MACD, and it had a crossover, but I don't like when it's above the zero. I like it below the zero to go up, but that wasn't perfect. And we got on, looks like we got a crossover right there. It says it's going to go up again, but again, it's above the zero line. I don't like when it had a crossover down here. I think that's a stronger signal. And this has tended to go down. So as a trader, you have to ask yourself, is it going up? Is it going down? And so I think we have some headwinds based in DoorDash, and it's called a recession and inflation and tipping. And this stock wants to go up, and there's a need for it. People come home tired, they don't want to cook. Or my daughter gets hungry for chicken wings. So I think this stock is going to trade in a range for the next year of around $65 and $45. Iron condors, iron butterflies, broken wing butterflies, calendar spreads. Neutral types option plays could be done with this stock. Or you could just wait to short it when it hits the 65 and buy it when it gets to 45. If you did that and it moved at 19%, the total expected move would be about $10. And if you invested $1,000 for the next 3 months, that'll give you around $200, which is a 19% return. And that's a super AP. If you did it through 4 times, that's a super APR. Anyway, what do you think of this trade? Leave a comment below. Remember, do your own due diligence. Come up with your own strategy. What you could do here is compare what I'm saying against your indicators and see if you're a buyer or seller or neutral. I'm neutral. Anyway, leave a comment below. Happy trading. I'm doing pretty good in this market, and I'm doing a little day trading on gold, the Aussie dollar, and the RUT. And you can see that here. Is it gold, the Aussie dollar, and the RUT. And I have alerts. You can see that. And you can set alerts here when it hits the 45 or the 65. Happy trading. We'll catch you on the flip. Leave a comment, like and subscribe.